from Kansas State University, this is Agriculture Today. Eric Atkinson with you. And coming up today, our weekly visit with K-State's Dan O'Brien on the grain markets. He'll talk about the wheat market's reaction to the Russia-Ukraine situation, and Dan passes along his latest price probability projections for corn and soybeans. Also today, K-State's Kelsey Andersen Onofre will talk about fungicide strategies for controlling stripe rust and head blight in wheat, which she covered at the recent Wheat RX seminar series. Kelsey is urging you producers to keep fungicide use in the mix of your wheat management plan this year, despite the higher production costs you're likely to incur. And on the Kansas Agricultural Weather Outlook, K-State's Chip Redmond. All that here on Agriculture Today. This is the K-State Radio Network and Agriculture Today. Thanks for tuning in once more to the grain markets. What's going on there? Dan O'Brien is aboard, grain market economist, K-State Research and Extension, for his weekly visit about these trades. As we go along here, Dan, we will get into what you've just posted online at agmanager.info, your latest price probability projections for corn and soybeans. Interesting numbers there. But to the trading week just passed, seems that the markets are fixed on, well, two things: South American weather and the ongoing tensions on the Russia-Ukraine border. Is that how you see it?
Well, yes, and varying reports about the Russia-Ukraine issue, and that in particular is a factor in the wheat market. Probably the primary supporting issue in the wheat market, along with dry weather that we've had here in the U.S. Again, we're not into the politics of all that, or we shouldn't be, other than to note that uncertainty certainly is a factor up and down in the markets. We have a lot of volatility just on a day trading basis. You'll look at what's happening in the morning, up 30 cents. By the time a rumor gets shot down, it's down 25 or 30. So in the wheat market, closed yesterday in March at 8.23. Very little carry, just 1 or 2 cents going forward. Generally up 15 some cents, but we've been up and down, generally moving a little bit to the high side. You can see on some of the charts that we show on our daily notes and summaries. So quite the situation. And when you follow on wheat, since we're talking on that, we have okay exports, but yeah, again, the support for the wheat market's coming from the potential of what could happen. Actual wheat exports for all U.S. wheat for the week ending February the 10th are about just a little over 15 million bushels. We need a pace of about 21, 22 to meet the USDA's projections. And also for hard red winter wheat, a pace of about 6.7 million bushels, need about 9 to meet the USDA's projections. And if anything, more disappointment than in other markets in terms of where the hard red spring wheat exports are, about 3 million bushels for the week ending February the 10th, and need a pace of just about 5 to meet the USDA's projections. So what's the USDA up to? Well, they're, on those projections, they're betting on the future that if a conflict comes about in the Black Sea region, that there'd be at least disruption of logistics in moving wheat out of there. If not, flat out, repercussions on whether trade could go forward between Russia and these other places. So you'd have two countries, arguably the two price-leading countries in the world wheat markets in military conflict, and the potential for a lot of problems to occur.
No doubt. As for the feed grain and soybean trades, it is about whether or not it'll rain in South America. And for the bulk of the week, the answer to that has been no, and prompting higher prices.
Yes, some forecasts of a little bit of moisture in the interim, but then a return back to warmer, hotter weather in the days and weeks following that. So again, we closed yesterday at $6.50 for the March contract. Just amazing. We're just taking that in stride now, not even blinking. $6.50 for March 2022. New crop at $5.96.5, heading for $6. And remember also that this is a time for corn during the month of February when we're looking at that D's contract and are figuring out our crop insurance planning price for the 2022 crop that will be harvested. Same situations happening in soybeans, $14.60 as of yesterday's close, so well above $14 for that USDA average. But by the way, the corn average last I looked was about 487, 483, something like that. Higher closes like this halfway through the month could make that just that much higher. So anyway, but for soybeans, $14.5, $15, something like that for a planting price, and all that's positive for both those crops in terms of encouraging planting. I would say that the upfront contract, March contract, closed at $15.92, and when you look at recent history, we've closed over $16 in the last several days, or at least traded over that. So a lot of support where these markets could be going in the futures. And, I think the main scenarios that I've been wondering about, two things we can sort of look towards would be what our acreages might be for corn and for soybeans, and also how some of the inflation in costs, lack of availability of fertilizer and some of these other inputs, how that could at least have a modest or a moderate effect on corn and soybean yields this year.
And those, in fact, are the main ingredients in the aforementioned price probability projections that you have put together for corn and beans. Acreage expectations, possible production complications. Let's start with corn and what you're thinking along that line.
Well, keeping in mind that this year's season average price is projected by the USDA to be $5.45 with about 10.4% stocks to use. If we look at three scenarios, say about a 20% chance of corn acres being unchanged, corn and soybean acres being unchanged this year, that farmers heroically planted all the corn that they intended to, and then none of that bled over into soybeans. And again, putting about a 1 in 5 chance that happens. So I'm not really believing that's going to happen, but a 1 in 5 chance that it would. And assuming about a 2 bushel per acre U.S. average yield loss from 177 down to 175 just because of fertilizer issues. If nothing else, just that, much less dry weather showing up all over the place. Well, in Western Corn Belt anyway. So you've got a size of a crop at 175 bushels an acre, about 14.9 billion bushels. Ending stocks about 1.6, 1.7, 11.3 stocks to use, and a price of about $5 for the season average price. So that compares to 545 this year. Now, the next scenario for corn, it would be about a 1 million acre loss from the previous year. Again, we're at 175 bushels per acre, and crop size of about 14.8 billion bushels, 1.5 billion ending stocks, and about a 10.2% stocks to use. So just not far off, just a little bit lower than this year. So about a 560 price. And again, saying there's about a 65% chance of that, almost 2/3 chance that we end up with some reduction in corn, some increase in soybeans. And then the tougher scenario, if you're a corn buyer anyway, about a 15% chance of we get us getting about a 2.5 million acre reduction in corn. That all goes to beans. Again, saying that's about a 15% chance in my own judgment. You end up with a U.S. corn crop at 175 bushels an acre, about 14.5 billion. Ending stocks 1.2, 1.3, and prices at 675. We're in that price stocks to use situation to where we'd be getting tight and prices start to really respond. So you just flip that scenario and go over to soybeans and see the other side of that. Again, 20% chance of the same planted acres and about 50.5 bushels per acre instead of the 51.4 we had this year. You got at least a modest decline, about 8.95% stocks to use out of that, 388 million ending stocks, about 4.36 size of crop, a price scenario of about $12 a bushel. And I'm kind of have trepidation in talking about these other scenarios because after looking at $16 soybeans, when you hear a very conservative price forecast for the next year, people are likely to shake their heads in disbelief. But when you look at where we've been at, unless you're counting on inflation to save the day on prices, and you look at where we've been in the past year or so, even this past year, with the USDA projecting $13 a bushel, then you end up with a 1 million acre more scenario and the 2.5 million acre more scenarios, giving you about 11.25 or 10.75. So all these prices that we have now, if these scenarios play out, the new crop bids that we're seeing in Kansas at different places, and some of them are substantial. You know, when you look at new crop soybean bids of 1361, 1406, 1391. Those new crop bids are substantially higher than, at least by my calculations, we'd end up if we actually plant more soybeans, we have a decent crop, and we have to absorb increased supplies in the market. So I'm not trying to just be a negative bell ringer, but there's some risk out there in the soybean market if we actually see sizable acreage increases and some of these other issues that are coming in and affecting all of the world economy and ag commodities.
And again, those projections are spelled out fully in Dan's weekly notes at agmanager.info. Before we let you go, Dan, you mentioned local forward contracting opportunities for soybeans, but more widely, you are keeping a close eye on those local spot cash and forward contracting bid relationships at the delivery points around Kansas.
You really see the new crop bids for corn in the Garden City, Southwest Kansas area standing out. On yesterday's closes, $6.17 is the new crop bid for corn in the Garden City market. There's one at $5.86 in Hutchinson, $5.81 in Colby. So you've got about a 25 cent gain for corn in Garden City over anywhere else. For grain sorghum, you have some pretty strong bids in Colby and Salina and Topeka, and weaker bids in other places. And, you've got some pretty strong bids, over $14 in Salina, Topeka, and Hutchinson for soybeans.
Interesting dynamics at the local level for sure. Dan, until next Friday, many thanks to you.
Thanks, Eric. Take care.
Dan O'Brien, grain market economist, K-State Research and Extension, and once more, be sure to tap into his weekly notes on the grain trades, covering everything and more that we discussed right here. agmanager.info is where you'll find those. We'll be back on Agriculture Today. Agriculture Today continues now. You might know that K-State Research and Extension was involved recently in a pair of highly successful outreach meetings for wheat producers under the Wheat RX banner. K-State teaming up with Kansas Wheat to host these sessions in Hays and Wichita last week. Very well received, we understand. And one of the presenters from those seminars is with us now. She's a wheat disease specialist with K-State Research and Extension, Kelsey Andersen Onofre. And she talked of all things wheat disease control at these seminars. Pretty good session, you say, Kelsey.
Oh, I think thanks for having me here. I think the sessions turned out really nicely. I think we had great turnout, and we had really engaged producers there. So it was really great having some discussion during the presentations and after the presentations. The rooms were full, and that was really nice. It brought on some nice discussion.
It was good to have great dialogue amongst participants at these events. You were brought in, of course, to discuss wheat diseases and contending with those, part of which was a reflection back on 2021 and our disease issues.
Yeah. So I know it's not always the best to look back on our issues from last year, but in context, we talked about what some of our main problems were last season. So if we kind of went at the big picture, we had about 14% estimated total loss to disease. So about 14% of our yield that we could have had was left on the table, and that was due to diseases. And if we break that out a bit more, our top disease was stripe rust. So that's not a surprise. We've had some pretty bad years with stripe rust here in the last 5 or 6 years, but last year we did see pockets of the state where that was an issue. We also had pockets of the state, and we're still thinking this through, where we had bad Fusarium head blight. So that's a problem that can sneak up on you a bit. You can't get out and scout for it. It's a problem in fields that have had a history of corn or a corn-wheat rotation. And we had that condition where we had flowering and we had actual rainfall right at that flowering time, which we don't always have in western Kansas. So we had issues with Fusarium head blight as well. We also had issues with wheat streak mosaic. I was talking about fungicides at Wheat RX, so I wasn't talking as much about viruses, but we can't forget that was a big one for us this past season. We talked a little bit about common bunt. So that's been an emerging issue and a bit more problematic and something that, hopefully we considered seed treatments for this past season, but we'll certainly be on the lookout for it this coming season as well.
Compared to past history, though, 14% loss to diseases last year. Does that match up with historical trends?
That's probably above the long-term average. So if we're thinking about, our average over the last 20 years, that certainly is trending above that 20-year historical average. There's a couple reasons for that, right? So, we've had this increasing issue with stripe rust. So stripe rust came on in 2000 as an issue in this part of the country. And then in 2010, we had some race shifts. And then recently, we've had, some additional race shifts that have broken down some of our workhorse varieties. So we've seen an increase in stripe rust, and probably we need an increased focus on foliar fungicides until we get some better varieties or varieties with better resistance out there in the landscape. Another thing that's probably contributing to that is Fusarium head blight. So that was one that, with expanding corn acreage in Kansas, we're probably going to see that tick up as a bigger problem here over the next several years. So it certainly is one that's probably pushing us up above that long-term average.
And all of these accent fungicide use, and you obviously discussed that during the Wheat RX session. You've had a chance here at K-State to take a look at the multi-year performance of those fungicides and how well generally they pay off against some of these common pathogens, right?
That's right. So in collaboration with Romulo Lolato and Alan Fritz and Eric DeWolf, there was a recent paper that we published that looked back at historical data sets. So many locations where fungicides were sprayed or not sprayed. And we looked back at the historical yield gain of spraying those fungicides, right? This is across the last 12 years, so many locations, many years. And so if you just looked at that kind of in the sum, you get around 7 or 8% yield benefit. So not even thinking about which disease is where, but there was about a 7 or 8% yield benefit. That yield benefit can go up to 100%, right? That's in our bad stripe rust years with our susceptible varieties. It could be slightly negative yield increase. That would be a much more rare scenario. But you do see that yield impact of about 7 or 8%. And that's even more, right, when we break out susceptible varieties. So when you have those varieties that are susceptible to either stripe rust or septoria or tan spot or leaf rust, you're much more likely to see these bigger yield gains, right, when you spray a fungicide. And that goes along with some of our management recommendations, right? We really want to be prepared to spray a fungicide when we have these more susceptible varieties out there in our fields.
General management against those two that you cited as prime last year, Fusarium head blight, stripe rust, talking about that blight, fungicide application, and perhaps some other cultural considerations here? Yeah,
so kind of our dogma, our best case scenario for Fusarium head blight management is to pair a moderately resistant variety with a fungicide application at flowering. So there have been some long-term studies that have shown that if you can do that, you can get up to 70 or 80% control. So neither of those is perfect alone, but together those are our best strategy. But if we only had the option of making a fungicide application, the key for Fusarium head blight is getting that application on at the right time. So unfortunately, we have a very narrow window that we can make that application, and it's right at that start of flowering. We call that Beeks 10.5.1, right? So that doesn't roll off the tongue very well, but that's right in that early flowering window when you start to see anthers, those yellow anthers on your plants. That's the time we need to get that fungicide on.
If one is too late, the efficacy drops significantly then? Is that the point?
Well, it's better to be late than early with Fusarium head blight. So there have been some studies that even if you're 4 or 5 days late, you could still get control, especially because you're protecting some of your secondary tillers. You're optimal when you're at that early anthesis, but going late is okay. You do run up against your pre-harvest restriction there, usually at the end of that flowering window or 30 days prior to harvest. But interestingly, most products, they're labeled for that early flowering window. But there's a new product, or a newer product, it's not that new, but it's newer. It's called Miravis Ace, and it's a 2 mode of action product. So it has a group 3 fungicide and a group 7 fungicide, which is a bit of a step change for us. Usually we manage Fusarium head blights with a group 3 fungicide. And the good thing about this fungicide is that it's actually labeled to be applied slightly early. So you could potentially apply Miravis Ace at heading. And so in some studies, we've evaluated that timing. We've gone out and we've compared it to this on-time application at early flowering and also to other products. We found that, yes, you can actually apply that product early. So that's good news. The one small watch out is it might not control the toxin as well as an on-time application. So you might get pretty reasonable control of the visual severity. But remember, we think about toxin, deoxynivalenol, vomit toxin, when we were thinking about Fusarium head blight. And so that's some of the things we talked about at WheatRx, right? Getting those, not only that timing right, but really thinking through the product choice when we're trying to manage for Fusarium head blight.
So possibilities there. What did you talk up as far as stripe rust management then?
Well, we talked about fungicide products, right? So people want to know what to spray and when to spray. That's the call I get probably the most in that May time frame. And so we talked about, making sure we're making our application when we have full flag leaf extension. So we looked at some data showing, how different that result can be if you just go too early and you don't protect your flag leaf. You can certainly get a lot more disease on the back end. So we want to get the product on at that flag leaf time. And we looked at some fungicide trial data, and really there are a lot of really good products out there for stripe rust control. So we compared our products like Top Guard and Quilt and Prosaro and Nexicor, some Folicure type products, really kind of a laundry list of products. And, well, the spoiler is a lot of them work really well for stripe rust control, right? So as long as we get them on in the right labeled rate and at that right time where we're protecting our flag leaf, we can really get good control of stripe rust. That's probably the take-home message we talked about the most at that meeting is getting that timing right for these fungicides.
Fungicides pay off. Producers may be thinking this spring in terms of economizing because of other input costs, and maybe the availability of fungicides is in question too. That's to be determined, but by all means, one should think employing fungicides if at all practical.
For sure, especially if you've got a variety out there that has a susceptibility that's a 4 or greater, so something that's more susceptible to stripe rust or Fusarium head blight, it should be in the budget, right? We should always scout, we should always watch the weather, but we should really be thinking about not skipping that input this year if we're having a year where we have any disease risk.
Kelsey, we're looking forward to speaking with you frequently during this next spring, as we typically do, and catching up on what is happening disease-wise in the Kansas winter wheat stands out there and the appropriate response therein. So thank you for going over this. We appreciate it.
Oh, yeah. I'm always happy to be here. Thanks for having me.
She's Kelsey Andersen Onofre, wheat disease specialist, K-State Research and Extension. And we'll be back with more on Agriculture Today. Capping off this Agriculture Today, Kansas agricultural weather is in the spotlight. Once more along with us via phone is K-State Research and Extension meteorologist Chip Redmond with a report on the snow event which rolled in late Wednesday into yesterday morning and continued on. Chip, the significance of this obviously depended where you were in the state, but it was not a statewide happening, was it?
No, unfortunately, it was not. The majority of the snow fell along the I-35 corridor. As much as 7 inches of snow, a little bit higher in isolated areas. It wasn't extremely widespread. It was narrow corridors that saw the heaviest. But then as you get further west, away from that I-35 corridor in southeast, as you get further west, there was some light snow that fell, but really not a lot of precipitation. So liquid equivalent, we're looking at anywhere from around 0.8 of an inch in far southeast Kansas, where they've gotten the moisture most recently, and then as much as a 0.5 inch in isolated areas across the Flint Hills and to the Missouri border. And as you get further west, we were lucky to get 0.1 of an inch with a lot of that snow. So not a whole lot of precipitation. Most of central and northern Kansas missed the precipitation, unfortunately.
And again, those are areas that need drought relief, and they just went wanting. Once again, the drought monitor presumably hasn't altered much from last week.
Yeah, the biggest change this week was a north-south corridor of severe drought was introduced that connected severe drought in the far southwest. So about the Ashland into Barber County, and then northward from Barber County all the way up into Rooks County, about where the 4-county fire occurred. So they're now in severe drought in there. And that's been a hole that over the last 120 days, they've gotten 25% or less of their normal precipitation. And that's also where we've seen warmer conditions as well. And so those play a role in increasing the drought this week.
And have to mention, although it seems to be a regular topic now, another week of wildfire outbreaks around Kansas. We had some terrific winds in the middle part of the week fanning those flames, and so we're still contending with that, Chip.
Yeah, we had multiple large wildfires, especially one in Reno County and the one east of Harrington. You know, this is our core fire season, mid-February into late March. And when we have a day like Tuesday where we've got strong winds and persistent drought across over 2/3 of the state, we're going to have fire issues in the state. We really need folks to go out and check their burn piles if they do any day or 2 days, even weeks after they burn, to make sure that they're cold, because rekindles are a big concern as we get further into the prescribed fire season. That's also our core fire season. So people just need to make sure they check their fires, because they're going to hold heat a lot longer than you'd think with this persistent drought.
And looking forward, we're stuck with dry weather again for the better part of next week. Is that the forecast?
Yeah, so right now we're going to warm up for the weekend, and it should be a pretty nice weekend, abnormally warm, actually. And then come Monday, Mother Nature is going to kind of slam the door on us. So we're going to get a cold air that comes in, and much colder air will persist for most of next week. Precipitation-wise, a little bit up in the air. It's going to be dry through at least midweek next week. We have another potential system coming in about that late Tuesday into Wednesday time frame next week that may bring the potential for some moisture, but most likely, again, it's going to fall in the east and be not likely to be much of a big weather maker for most of the state. But cooler than normal temperatures, and with strong cold air advection coming in from the north, it'll be windy as well.
You'll deal with what comes, and we appreciate you keeping tabs on all of it. Next week, we'll catch up with you once again, Chip. Many thanks, and enjoy your weekend.
Yep, you too, Art.
Chip Redmond there, meteorologist with K-State Research and Extension. Our time's away once again. Thanks for tuning in, and please do enjoy your weekend. Eric Atkinson for Agriculture Today. This is the K-State Radio Network.